Donald Trump has big plans, again.
That's a big one. Big one. Giant.
This time, it's a sovereign wealth fund for the US. Trump wants it to be as big as Saudi Arabia's $925 billion public investment fund. But how will he make that happen? And what is such a fund actually? Sovereign wealth funds are state-owned investment vehicles. For governments, they're a way to invest capital on the nation's behalf. Most of the world's biggest sovereign wealth funds are fueled by oil money. Oil-producing countries invest their profits in stocks, bonds, real estate and more. Their goal? To prepare for a future that's less reliant on oil. But unlike these countries, the US lacks large surpluses from oil revenue and has run an annual budget deficit for over 2 decades. But not all sovereign wealth funds rely on oil. India's National Investment and Infrastructure Fund is worth $4.4 billion. Backed by the government and private investors. Its goal is to invest in India's infrastructure and promising companies. Could this approach also work for the US? Experts believe it's more likely that the government will reallocate existing assets or take on more debt. Even Saudi Arabia has used debt to grow its state fund, despite having substantial surplus revenue. But with the US already over $36 trillion in debt, this is likely to raise interest rates and harm the nation's financial stability. Still, Trump has dropped hints that the needed billions will come from
tariffs and other intelligent things.